Hi fellow traders, I'm making this video to show you my multi-time frame analysis for AUD USD. So I'm going to start with daily time frame, and here are few indicators. So we are going to ignore many of them, and I'm going to consider only one indicator on daily time frame, which is Bollinger Band. So if we look at the movement from this point to this point, this was fast enough to trigger some sort of correction to the downside. And when a candle pattern like this to the downside was made, actually this candle pattern combined with these two make a three inside down. And after this three inside down was made from the upper band of the Bollinger, there was a high probability of retracement to the downside to the mid band. Besides Bollinger, we can expect harmonic retracement to the downside as we have seen here. So you can see this was the previous magnitude of the downward correction, and we could expect similar downward correction from this point. But market moved to the downside, however it did not complete similar correction, and the target of this similar correction is similar to the mid band of the Bollinger. So there is no contradiction between the harmony of correction and the Bollinger band. Both are saying the same thing, that market should come down to this area, but poorer than expected services PMI and manufacturing PMI from the US last week gave boost to almost all pairs like Euro USD, GBP USD, and AUD USD, which is why AUD USD turned to AUD USD actually started going to the upside, and there was a huge bullish move, and it started going to the upside, and it stayed bullish in previous week, and our target to the downside was not completed. But I was trying to look whether this move to the upside is bullish enough to make a new high, or this is just an upward move and market can still go down to correct the previous huge movement from here to here. And I was trying to see if market can still go down and can reach around this area, or at least now we have different target according to the band, which is 0.66123. So even if we are not going to get this correction, at least this is going to come 0.66123. So I was waiting for any bearish pattern to trade this downward correction, and then we got some comment from Philip Lowe, the governor of Reserve Bank of Australia, about mortgage condition, labor market condition in Australia, and also about uncertainty of interest rate hikes. So his comments about interest rate, mortgage condition, even he actually apologized for people struggling with mortgages in Australia, and he himself said that he is uncertain about the labor market. So these kind of dovish comment from the governor made Australian dollar go bearish, which is why we got this downward move, and this move was big enough to make a candle pattern. If we talk about the candle pattern, this is a small candle, and these two candles together don't make any significant pattern. But if we combine these three, then again we have a candle pattern, which we can say either more evening doji star, or maybe, and if we just consider this candle as a doji, so this is a bearish pattern. And if we'll talk about this indicator, this is MACD predictor. So if market closes below MACD predictor, it changes the trend technically according to this indicator. So after formation of this candle on Monday, it was clear that the market is going to move to the downside, and it is going to continue to the downside, because the previous bullish force from this point to the upside was not strong enough to make a new high and cross above this previous high. So that was a sign of downward move. But I was not willing to take my short position here, because if I took my short position here, and if I kept my SL above this and TP at the Bollinger band, the mid band of the Bollinger, my stop loss would be kind of 4 times bigger than my TP. So I cannot risk 4 times to make such kind of profit. So I waited for upward correction, and then market started going to the upside, against this recent downward move. So let's go to the 4-hour time frame to understand what exactly happened. So this was the move to the downside, including a little move of the Friday, and then this move of Monday, and this was moved to the upside. That is a correction, and then market made a shooting star, which is a bearish candle pattern, and this can be a triggering factor to take the short position. And here is when I took my short position, because I was waiting, because from this point my risk and reward is now pretty close to each other. It's not, there is no huge difference. I am getting a better reward. So if I calculate my risk from this point is just 75.2 pips, and I'm keeping my reward around 75.2 pips. So if I go measure 75.2 pips from that area, that is come in 66, 35 and 3. Let's go back and check if mid band is lower than that. 66, 12, 3. So mid band is below my target. So basically my target is above the very recent support. So there is no contradiction between the support and my target. So this is how I took my position. I use MACD on 4-hour time frame to understand if my trade is not against MACD. So with this move to the downside, histogram already crossed below this MACD line. So you can consider this point as a crossover to the downside, which can be the beginning of a downward swing. And then you can see that the divergence between the MACD line and the histogram border. So classically everybody knows that as there is a divergence between these two lines, there is a strong trend. And of course this was a strong trend to the downside, but I was not in a sell position already. I took sell position here. So I was trying to make sure that the condition did not change. So then I started looking at the histogram. So histogram was being made below zero line, and even after this upward correction and the shooting star, no histogram made above zero, which says that the downward momentum prevails. So even MACD and my bearish bias are actually in agreement with each other. So there is no problem, and that's why I have entered my position after this shooting star. So basically these are the things, but we have to be careful in this trade. If you're going to take the position right now, or maybe you are already into a short position, you should be careful about US dollar news coming tomorrow. I'm not going to close my position according to ADP and FP, because most of traders are not going to consider NFP, ADP and FP. Even if people will consider ADP and FP as a like a pre-signal of the NFP, they will take decision prior to NFP, not before ADP and FP. So we can hold on to the position. But then there is another news coming in, and that is the prelim GDP. So I am more likely to either move my SL to BE, that is the break even, or I am going to close my position before the release of prelim GDP from the US. So